Absolutely, Agam. So let me quickly cover 4 key points that the report covers. One is what they're suggesting is as India grows into the third largest economy globally, it will require both digital assets as well as physical assets, and in that requirement Adani is at the forefront. It's at the core of addressing that requirement and enabling India to become the third largest economy in the world. So that's point number one. Second, what they're suggesting is that there is a shallow coverage where it comes to Adani Enterprises within the analyst community. Adani is the 10th largest non-banking financial name in terms of size, but despite that, the coverage is quite shallow, which therefore also makes investors weary of investing in the company, and the investor knowledge and depth is slightly lower, which is one of the reasons why the stock is not valued as well as they believe it ought to. Thirdly, what they're suggesting is that Adani has over the year or so made notable progress when it comes to their balance sheet itself. The debt has come off. Adani has traditionally funded a lot of their new businesses through debt, but now that has changed. There's a shift there. There's more prudence with regard to where the balance sheet is. Lastly, with regard to valuations itself, firstly, within that, they are calling the Adani largely as an incubator of businesses, and a proven incubator with a good track record is what they are terming Adani Enterprises to be. Therefore, what they are suggesting is that the valuations ought to be slightly richer, because there are many businesses within Adani Enterprises which yet are to unlock value. But within the current business setup, you're looking at roads, airports, and you're also looking at solar and wind electrolyzers, except corporate. So excluding corporate, that contributes roughly 4,500 rupees per share. But when you include corporate, it comes to around 3,400, which is a negative 1,200 impact. Now, when you're looking at the valuation itself at 3,400, you're still seeing a 10% upside to current price after the run up today. You're also, therefore, Cantor seems to be suggesting that there are 6 businesses which are coming for free outside of these. So there is plenty of safety in terms of margin with regard to valuations, is what they seem to be suggesting.
Harsh, thank you so much for that. Of course,